This series of videos is going to talk about financial management. Now, the term finance essentially means whatever deals with money in organizations, in personal finance, for governments in general. Financial management is essentially the management of this money as taken by managers within organizations. This would entail almost all the functionalities, right from where to get the money from, how to get the money, how much to pay for that money, how do you use that money, and what kind of returns can you generate using that money. So in a nutshell, this is going to encompass almost the entire sense of how does business work and how do you really get returns or investment returns out of the business when you're like deploying the money in the business. Financial management is the backbone of almost all finance theory that we're going to study, and hence becomes an important concept because some of the concepts that we will learn here will almost go all the way through whatever finance you're going to use in your entire career as a financial analyst or as a financial services professional. Even if you're not in financial analysis kind of roles but are in more core finance teams of organizations. These are general management principles that are relevant in terms of understanding how does a business function and how best can you utilize the resources that are available for a particular business. So these theory points that we will read here and the practice that we'll do around items here are essentially the relevant parameters that are used by any business professional, any MBA, any manager in terms of running and executing a business in the best possible manner that is available with the available resources, right? Now let's look at what is going to follow in terms of our premise of financial management and try and understand a few basic data points. This particular video is an introduction to the entire concept of financial management and how this financial services industry uses the financial management tenets. What are the motivations behind it, and how does the flow of money work, and what are the major principles and challenges within the financial management regime, right? So in a nutshell, we are going to look at what is the motivation behind financial management. We're going to look at flow of money in the financial system. How does that flow around? We're going to look at framework for financial management. We're going to look at some key variables in finance, fundamental challenges in finance, and 6 fundamental principles of finance. Right now, some of these principles are important for us in the course of this particular program. Some of them may be more relevant in subsequent programs that will come to us, but it probably is a good idea at this point of time to look at some of these data points and understand this in a little bit more detail, right? So let's try and begin. This idea is basically an introduction to finance as such, right? And not finance in the context of accounting. Accounting is an important application and usage of finance, but this is more to do with key decision-making criterion in any kind of business, right? Now, let's start with the motivation behind why we are learning this, right? We have snaps of 5 gentlemen on the screen, right? Take a minute and try and guess who these gentlemen are. So if some of the names might be very familiar, some of them are kind of giveaways based on what you see in the images, and some of them may not be that familiar, right? So let's look at who these guys are. So the first one which you see on the left side is Mr. Dhirubhai Ambani, and someone who doesn't need any introduction. The founder of Reliance Industries, the Reliance Group in India. The right-hand side image talks about Mr. Warren Buffett, again someone I think who does not need too much of an introduction, a legendary value investor who has essentially been investing for the last 35-40 years, maybe more than that, and has been generating remarkable returns for his firm over this period. The other 3 may not be as familiar, but some of them you might catch with the names there. So Mr. Louis Gerstner was the CEO of IBM in the early 90s, and he took over IBM when IBM was not doing too well. If you know of IBM, IBM was the inventor of personal computing, and till about 90s, early 90s, it was largely a hardware company. They used to make computers and big computers as such. And then they suddenly got wiped out because the other guys entered that computer making space. So Louis Gerstner is the person who is credited with the transformation of IBM from a hardware giant to a successful software giant. IBM completely moved themselves towards a software services company from a product company as such, right? And IBM was a big company to have been converted at that stage. The person on the lower left picture is Mr. Alan Mulally, who took over Ford Motors around 2006 2007 when it was going through that crisis, and essentially took Ford through the entire financial crisis of 2008. This is the person who was responsible for the JLR deal, in which Ford sold Jaguar Land Rover to Tata Motors. Uh, and that one deal where they kind of raised $2 to $3 billion is what saved Ford during that year of 2008 when the financial crisis had hit the US, right? The final person is Mr. Dilip Sanghvi. Uh, this person is the founder and the CEO of Sun Pharmaceuticals, India's largest pharma manufacturing company now. And Mr. Dilip Sanghvi is currently the second richest Indian, and in terms of net worth. And at some point of time earlier this year, he was the richest Indian in terms of net worth. Then the stock price of Sun Pharma fell, and he is one of the biggest shareholders in Sun Pharma. So his net worth also came down because of that, but he still is the second richest Indian. Now, what is common in all these gentlemen is that these are guys who are essentially people who have applied basic tenets of finance, right? The basics of finance well into the businesses. So they have run their businesses, they have created businesses, or they have created successful businesses out of purely simple financial management to create big businesses, profitable businesses, or to wade through difficult times like what Mr. Gerstner and Mr. Mulally did for their respective companies when they were not doing well. These are all guys who had a long-term view, who had the management capability, but one thing which was absolutely common amongst all of them, or which is absolutely common amongst most of them at this point of time, is their understanding of basic financial management tenets, that you have to raise money and you have to deploy money in order to run a business successful. And the cheaper sources of money that you can raise and the better way you can deploy this money, that is going to define what is the outcome of the entire process. For example, there are like thousands and thousands of investors in the world, but Mr. Warren Buffett is considered one of the best investors because for every dollar that he invests, the amount of return that he generates is far more than what anyone else on average would do. And this is purely possible by simple understanding of basic financial management concept and a very disciplined, dedicated application of those concepts. Sun Pharma as a company is known to acquire smaller companies, companies that are not doing too well, and then turn around those companies into successful units. Right now, that also takes foresight, that also takes an idea of what companies to buy, what price to pay for those companies, and how do you generate return out of those companies, right? So all these guys basically have one thing in common, which is that their understanding on financial management, the optimal use of resources in order to run the business well, is what is common in all these guys, and that is where the basic tenets of financial management start. If we can master these tenets, whether we become as successful as these guys or not is what time will tell us, but we surely will have all the prerequisites that are required to become a successful business manager or a successful financial analyst, right? And That is absolutely critical for us to be successful as finance professionals over our lives, right? So that is why this is one of the most important subjects that would come across to us in terms of our learning of finance across our curriculums, right? Let's move ahead and try and actually understand the flow of money in businesses, in financial markets. So essentially, there are three kinds of entities. Entities such as households, which is people like you, me, our families, our households, which are probably generating some money. There are businesses who are also generating money, and there is government that is also generating money. All these guys pool together their resources, the money that is there, and this money flows in the form of investments into capital markets, which are essentially things like stock markets, into bond markets where someone would be raising this money that these guys have given them, and into other asset markets like real estate markets or commodities markets, etc. Now these guys make some returns out of it. Those returns go back to businesses in the form of profits. They go back to individuals or households in the form of typically investment returns, and they go back to government in the form of two or three mechanisms. One is obviously the government could be working as an entity, so something like the NTPC may have deployed money somewhere and they would make money on it, which would be a profit. The government also gets taxes, taxes on account of businesses, taxes on account of households, which again gets channelized. This flow continues. So essentially, money gets generated by these three units, gets deployed into capital markets, bond markets, other asset markets. They get returns, they get their profits, money comes back to them, either gets redistributed between those or gets funneled back into the same markets once again. And in this process, the flow of money keeps creating wealth.